Guys, we'll be starting the session in next 1 minute. Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. I hope everyone's doing well, keeping well, and enjoying this volatile market as well, which we've been experiencing for the last 1 week. So, without much ado, let's start with Nifty 50 chart analysis for the day. So, if we talk about Nifty 50, today moment, it had a muted opening with kind of a negative bias. It went down, made a low at near 17,500, then rebounded strongly within a 100-point range as well. So if we talk about the entire today's movement for Nifty, it was in the range of like 100, 120 points. So it was not that much. Within that 100, 120 points, it was like oscillating throughout the day, if you can see through the chart. So it made a low of around 17,500 in the first 1 hour itself. Then made a before the midpoint of the trading session, it made a high of around 17,600, 17,620 kind of. And after that, it again went down and touched a low of around 17,530 and gained momentum in the latter half of the trading session and managed to close just about 17,600. So if we try to describe today's session in one word, it was like a seesaw session for Nifty, where it just moved back and forth from its opening and between the close and this closed around 0.1% higher for the trading day. If we talk about the on the ONI front also and how it's placed technically, if we talk about it, uh, I mean, this if we draw this trend, sorry, just give me a minute. So, I mean, in terms of this 18,000 level, it did find some kind of overhead supply. And even when it will try to rebound back once again, this 18,000 level is crucial and it's likely to find some kind of overhead supply, some kind of resistance across these levels of 18,000, 18,100, 18,350. On the positive front is that I'm not able to draw the trend line in this chart, but if you draw the trend line across 18,350, 18,100. It's kind of trading above the that trend line support, which it's a good sign at the moment. But and even in talking about yesterday's session, not today's session, it found support at the 21 DMA and rebounded really strong from that 200 DMA on a high volume. So that was a good sign. Today, I mean the green line, this green line is the 10 EMA, which is the short-term move, very short-term moving average. So when markets are kind of volatile, you need to track the short-term moving averages such as your 10 EMA and 21 DMA to check signs of weakness as well. So today as well, Nifty kind of just managed to close just below the 10 EMA. But going forward, if the rally sustains, it will move ahead above the 10 EMA as well. The rally at the moment looks very certain because on the O'Neill front, if we talk about it, the distribution day count, which we use to track market weakness, is just at 2, which is a really good sign. So if till the point in time the distribution days count stay below like 4, 5, and 6, it's good and it's manageable. And Nifty is likely to stay in confirmed uptrend till the point in time distribution day count remains low. Talking about the top gainers and losers for the day. So the Apollo Hospitals, IndusInd Bank, ONGC, ICICI Bank, and NTPC were the top gainers for the day. Apollo Hospital gains around 3.2%, IndusInd Bank 2.9%, ONGC 1.7%, and ICICI and NTPC around 1%. The top losers for today were BPCL, Tata Steel, Divi's Lab, TCS, and Titan. BPCL and Tata Steel declined around 1.2%. Divi's Lab, TCS, and Titan declined in the range of 0.9 to 1%. So talking about the sector view, apart from your Nifty IT, Pharma, and Auto, all the major indices closed higher. Talking about the key gainers, if we talk about your Nifty Private Bank, your Nifty Realty was the top gainers, around 1.8 and 1.59%. Even Nifty Media was a good gainer of around 1.7%, but it's more skewed towards Z. That's why, I mean, with a single stock, the index can rally. So, if we talk about major market index, sectoral indices, the private bank and realty were the major movers. Even talking about Nifty Bank, or which is a good 34-35% weightage in your Nifty 50, moved around 0.88%, which led to probably Nifty closing in the positive range. Uh, Talking about key news, Monarch, through its Monarch Alternative Investment Fund, raised around 250 crores in its second Cat3 AIF. It plans to infuse around 1,000 crores in its existing and new business over the next 3 years. It has received interest from sovereign funds and family offices. Carb Investment and Borrowing Committee will meet on Friday to approve raising of funds by issuing non-convertible debentures through private placement basis. Punjab National Bank's interim chief financial officer resigned, and Gland Pharma gets USD approval for generic Naropan. Talking about the chart of the day for today for us is your Century Plyboards. And before we talk about it, so it's not a buy or sell recommendation. I'm just doing it for educational purpose. So Century Plyboard is like India's leading plywood manufacturer with a market share of around 25% in the plywood sector. Talking of major growth revenues has been plywood, which is 53% of the revenue, 19% from laminate, and 18.5% from the MDF segment. If talking about the Q1 FY23 results, the Century delivered really a healthy set of numbers. That the top line grew by around 96.4% YOY, which was like on a benign base. But even if you look at a 3-year CAGR of for the Q1 quarters, the CAGR is still at around 15.4%, which is really commendable. Talking about the EBITDA margin was up 280 from YY to 16.5%, but down 150 with QOQ, mainly on account of gross margin pressure, which is on account of your unable to pass through of your high raw material prices, but the company did take price hikes of around 2 to 7% in the plywood segment and around 3 to 4% in the laminate segment in this quarter, and is expected to take more in the coming quarters as well. So talking about the expansion outlay and status, the MDF expansion is on track and is expected to be operational by October Q2, October 22. And talking about the other greenfield capacity for your laminate segment, it's expected to be commissioned in Q2 FY24. Going forward, to talk about it in terms of the margin pressure, the EBITDA margin was around 10.1%, as key input cost was high, such as your timber, phenol, and even your higher brand spend. Going forward, the company expects sustainable margins to be in the EBITDA margin to be in the range of 13 to 15%. So overall, the growth story for the company remains intact. I mean, the capex plans remains intact for the company. The company is seeing some, I mean, from the highs of the raw material prices, the company is seeing the raw material prices like from the highs coming up from off highs as well. And in the H2C FY23, the company is expecting to regain its lost margins, which is a really good sign. And if we look at it on the technical front as well, on this right hand side of the cup, like post the result, in the anticipation of the result, post the result, the stock did reclaim its key moving averages, such as your 50 DMA, your 200 DMA. and even it did that on your above average volume. If you look at the high blue bars, which is a really good sign. Even the RS line has been trending higher, which is a really good sign. And even on the fundamental front, again, if we're talking about it, the EPS strength of 84 is really good. And if you look at the last 3 quarters or the last maybe 5 to 6 quarters of the result as well, has been exceptional for the company, and even which can be seen in a key metric, that is the ROE of 20% for FY22, which is really exceptional for the company. Overall, the ratings are really good. Buyer demand at a price trend at 74 price. Your RS line going higher, EPS at 84, and the stock had a reset of count for the base as well. So at the moment, the stock is forming a stage one cup base, so which is a really good sign. The only thing at the moment is the stock still has some run up to do. I mean, talking about this stock is like 11% off high and 11% from the pivot. So if the stock is further able to accumulate in this right hand side of the cup on above average volume, and is able to break out on above average volume, then it will become a really uh, good sign for the stock and can turn actionable for players who have the stock in their buy watch list if the stock is able to break out on above average volume. So that's it. And thank you from my side. And stay tuned and stay connected to the pre-bill space, and as well as the after hour space at morning 8:30, 8:45 a.m. and evening at 4:30 p.m. And do connect with the Traders Meet stream for the